Today we had about 0.5% in the green, fairly okay for the JSE locally, but the rand took a bit of a dive today, and that of course sparked some concerns. Let's bring in Makwe Masilela from Makwe Fund Managers. He's been watching the markets for us. Makwe, thanks indeed for your time. Let's start with the rand. I mean, it was, I think for most of the day, back above 15 rand to the US dollar, and then I think a little bit of a gain towards the end of the afternoon. But of course, you know, it makes travel more expensive, it stokes inflation, but this is really a story about China, or part of it, I would imagine. What's your take?
Good afternoon to you, and I think more of what happened with the US dollar because of the US Treasury yields, which continues to go up after last week, after we've seen the announcement coming out of the US Fed. The US Treasury yields at some point touched 1.5. So as they were going up, then the dollar followed as well, and the rand, unfortunately, relying more on what is happening with China, because China buys most of our commodities. If we start having doubts about growth at that end, then you tell yourself that they'll start buying less. Then as a result, that also had an impact on what happened to the rand. And unfortunately, the rand, compared to other emerging markets, currencies, was the worst performer. And I think because not just of the US issue of the dollar, but also because what is happening with China, because if that economy starts to struggle, then by all means, they won't be buying most of our minerals.
Yeah, you can see how dependent or interdependent we are as a world economy. Well, to make matters worse, we're also on the cusp of $80 for the oil price, Brent crude. I'm thinking come next week, Wednesday, petrol will be going up if these two factors hand in hand play a role and they stay that way.
Definitely, that signals difficult times ahead of South African consumers. And as we know that we're a net importer when it comes to oil prices, and we know that oil itself, or transport itself, it makes up almost 5% of our CPI basket. So it's not a good picture, but it's all because of demand and supply concerns, especially in the Northern Hemisphere as they enter their winter heating season. So the issues about supply and demand is picking up. And also, David, not forgetting that the world economies are slowly opening up. Some restrictions, COVID restrictions, get to be eased. So as a result, that some slowly pick up when it comes to the global economies. And as they do that, then you start seeing demand for oil prices. Hence, oil itself is sitting up. And remember, some OPEC members are struggling as well to put in that supply that I agreed on, that they'll start pumping more. They're still struggling to do that. And not forgetting those two hurricanes in the U.S. affected the supply when it comes to U.S. as well. So it's a combination of those things.
But you wouldn't be too unhappy if you were holding a Sasol share this afternoon, because of that oil price, we've seen a surge in the Sasol share price. What, about 6% up on the day?
That's a nice move by all means, you know, and Sasol followed their international counterparts. You see oil prices, oil companies doing well also internationally. But yes, it's a good move for Sasol itself. But now the question is, generally as a South African consumer, we should be worried about inflationary fears.
All right, thanks very much. We'll leave it there. Makwe Masilela from Makwe Fund Managers. Thanks.